videos 3 of 3 here. We are starting with PDD. If this is the Chinese company Pinduoduo, they changed their name, or just a different kind of company? Either way, the P&L looks pretty solid. If it's a Chinese company, that looks too solid. I would doubt it. And just because we don't have the same transparency that we do here in the US. Like the US P&Ls have to be pinpoint accurate. Okay, we have that weird wall of sellers above 128. So I would not touch it into 128. You do have a strong buyer at 108. If you lose 108, you're going down to 88. Otherwise, you have sellers at 128, buyers at 108, ping pong between the two. And that's all I can give you. The P&L is solid, so there's no fundamental reasons to sell it, so it comes down to timing. And you can see the seller starting from the red line on up, and the buyer that must hold is 108.8. Palantir. Look at this, as if somebody told us we could do this party hat. How accurate was this thing? Okay, and how accurate is this path? It's playing out. Now you do have support where it's at. If you look left, there's been a couple of times where they bounced off of this zone. So look at the orange thing. The orange thing has already played out, the orange path. And that was drawn months ago. I'm going to push it left a little bit. So nobody says, oh, Nick said it's going higher. It is going higher, but for different reasons. In other words, they might retrace half of this arrow, but I want you to know that that has played out. Get it out of the way. So rallies into 24 and 24.5, I think will be met with sellers, and I think it will finish this yellow spot. That's what I think, and I like the company. Oh, somebody said, I don't care what anybody said. I didn't draw these lines based on anybody's words. I've been very consistent. I like the company. I just wouldn't touch it until it's way lower than here. And it will go lower than here. Why? Because that's what the market does. Ups and downs. This one is not NVIDIA. It's a good company, but it's not NVIDIA. Nobody is. That's the thing. NVIDIA. Oh, God. Let's not make that conversation now. All right, this one. Who is this? PayPal. Don't buy. Don't buy. I would buy a put on PayPal. I would sell a call spread. I would short PayPal here. Earnings in 31 days. PayPal is a short, which means I would not go long PayPal. That's all you got to do. Just don't go long PayPal. Okay, it's a bearish position for me. And I'm the one that sold the put spread on the dip. Now I would sell the call spread against it or buy a put spread. Very, very cool. Very cool. Technically, I think PayPal should go to 63. So I think from here it goes to 63 and then bounce and maybe do this again. Target 1 and target 2. That is target 1 and target 2 zone. Qualcomm. I'm long Qualcomm or short? Short. Oh yes, we sold call spreads. That's what I sent out. I said, let's sell some call spreads. And I think it's working because nobody's asked me about it. Here's the thing though. If you do, I don't have puts or put spreads. That would be exciting. But the business is good. I didn't want to short the business. So if you lose this area, you're going to finish this job. And another bounce. This is, I wouldn't count on this one. I would count on this one. But it has a lot of support. So that's why I sold the call spread. I don't need any of this to happen. I just need it not to make another high. And if you're winning on that credit call spread, close it out. It's approaching earnings. RCL, not a good starting point. Bearish positions doable. Avoid headlines from earnings. These companies have big fans. The people that love to cruise love the stock as well. So it makes them very good believers. And the fact that this stock is at an all-time high should be shameful for us because there is no way this is the best situation it's ever had. Okay, yes, the income is recovering, but the balance sheet has not recovered. So the business is still not at its prime, but I wouldn't short it based on that principle. I would not be long up here. Okay, that would be a fair statement. RIG, nice recovery. At one point, I had conversations with people that it's a nice buy the dip moment against some support. Up here, that's the exact opposite scenario. It's going into a pretty bad it should be a pretty bad selling zone. First of all, you have this guy, hard seller, and then I think there's a rectangle to be drawn right here. Okay, I hit the tab as I was drawing, so that's why the drawing went to the left. Okay, anyway, you get my point. This is entering the end zone, not a starting position for a long. There we go, that's better. All right, ROK, Rockwell, P&L, okay. Seller at 296, give or take. Seller at 305, give or take. Seller at 312, hard line. You take out 312, you're going to hit that. But that is seller after seller after seller. Luckily, you have a solid support zone. And look, it continues to be solid. We drew this back here. Look how solid that zone was. If somebody paid attention to the charts and the lines I've offered, they were excellent entry points. All right, so what does that mean? Dips will be met with a lot of buyers below 273. You have solid support. Use that to try to break out. Credit put spread could work. Okay, Roku, long, yes. Short term, no clue. But long term long, yes, which is what I have, right? I shared a long term long with a credit put spread. It didn't do anything. So if you bought calls, you lost money. Because it didn't do anything, it just went sideways. I can't remember the last time Roku went this long sideways without a huge move. So here's a statement. It's either 51 or 75 in the next month or two. What? Yes, because this consolidation, it's either the base of a pretty good rally or the start of something hideous. It does have a lot of support though. So credit put spread, I'm okay holding that. Calls, not so much. However, you can add a debit call spread to capture the move higher. It's a good business so far. So StarBucks, good business, of course. The problem is all these blue lines. What are these? These are moving averages that have anchored at pretty important levels. And some of them were support at the time, and some of them were resistance. And now look at them, they're all above you. That's a mountain of sellers waiting to happen on rallies. So even if it rallies into that word resistance, which is 93.5 or 94, I think that would be an exit. So it's easier long via a credit put spread without having to need a rally. I'm solid with the business. The P&L is okay, and there's no outrageous valuation, but I don't know that it's going to maintain the long rally. So if you can profit from point A to point B and it's a short distance, okay. Otherwise, credit put spread might do you better. Be careful with the earnings. Shopify, I would not touch it up here. I remember struggling at 50. I think Wall Street will go back to that number at some point, 55, 50. Better hold 73. You have a hideous seller at 83. And in between those two, we got 75 and 81. So those are your numbers. Higher time frame, bearish position. I wouldn't touch it until it loses 65, personally. Shopify is a good company. I'm just talking charts. Schlumberger, I don't know what kind of company it is. I never look at it anymore. Not an obvious point of entry. So point A to point B and then halfway mark is a resting spot. So this looks to me like a target more than a starting point. So if I got long, I exit here. If I'm looking to get long, I missed the easy part. Why not buy the next dip into 51? SMCI, interesting battle here. The P&L is like NVIDIA. It actually changed because of AI. Look at the P&L. These are quarters. You don't increase sales like this in a quarter. But I don't know if it's sustainable. NVIDIA sustained it. Is this one just a honeymoon period? Like, can they do another one like it? Don't short it. If they can deliver another quarter like this, it's confirmation that it looks like NVIDIA. So when AI came out, the news from NVIDIA last May, it was, hey, we're going to do that kind of sales next time. And then the market priced in 30% rally in NVIDIA. And the next time they delivered. And they delivered, and they continue to deliver. So this one is riding the coattails now. Well, earlier I said at an AMD, there is no move like this one. So SMCI not shortable, but I wouldn't. You're in the middle of a range. It could go to 880. It could go to 1200. Why are you guessing? How do you know where to guess? I think it's easier to get the 1060, but I wouldn't want to go long unless I'm selling a put spread. I think we looked at it. You can sell. Was it this stock or MSTR? Maybe it was MSTR. So I won't say it here. Okay, jump into the live room. We can discuss that conversation. You can see the size of the head and shoulders, right? So if they lose 850, I'm going to round down to 850. Good grief, the drop will be neck breaking, 260 point or so. So it'll be in the 600s. But you need them to lose that first. They could easily make a new all-time high. Depends on their sales. Snowflake, good starting position. We didn't time it properly, but I think the credit put spread is still statistically viable inside that box. I haven't done anything with mine. You could trim it. If I took 10 and I collected, say, I don't know, $700 to open the trade, I could spend $200, $300, $400 defending it. How? By making it smaller, buying back enough to cut the risk in half or 1/3. I can rent a debit put spread to protect me, or put. I haven't done any of that, so I'm sticking with the snow position. SOFI, I'm glad somebody's asking about it. When it was rallying up here, everybody was asking. When it fell down here, no one was asking. And it's rallying up here, everybody's asking. Down here, nobody's asking. At least this time people are asking when it's down on its luck. I like the company. You can see my support zone comments. They're still there. So if you can ping pong between these two boxes, that's what you can do. Otherwise, look for an entry point lower. So I sent out a note saying I can sell a $7.50 put or $7 put for 50 cents and break even at 6.5 or something close to those numbers. That trade is still going on. I think you could have cut it and booked 50% gains. I had several people that reached out. They said they bought back the puts they sold and made basically $250 if they did 10 of those, because it went down to $22 last week. And I have confirmation that people booked it. If you wanted to own shares, there's no need to book it. But if it was a trade for you, it's good that you booked it. So what do I do with the shares? Nothing. There's no sign. We're stuck between sellers and buyers. If the market's correct, this one will be below 6 again. And then you would pounce. Hopefully you don't even need my permission. The business is solid. It's a good business. Also, I didn't see SOFI move on some sort of a government forgiving student loan headline the other day, so maybe they forgot about that. So SOXL long, I don't trade that ticker, not liquid enough for me. It's in the hands of the sellers after the peak, lower lows, lower highs. You do have a lot of support into the 40. So if it does dip, go long with a stop, because if you lose 39, you're going for a ride lower. But that would say a lot about the industry, right? So semiconductors are not struggling, but you have a few champions that might be hiding some weakness. It's a good trade. Buy the dip with a stop. If you're long here, you're looking for a breakout above 49, which can get you to 56, and I would scalp it out or challenge 56. SBUX, I will cover that in the whole video. I don't know how many times I have to say that. So tonight, again, this one also, I can, while I have you here, do not accumulate SQQQ. Do not accumulate SQs. I'll say it one more time. Do not accumulate it. If you bought calls here and you're losing money, do not add. It doesn't recover. This is the chart long term. It goes to 0. Why is the high 500,000? Because they reverse split it so it doesn't go disappear. This is Wall Street crap. Don't buy into it unless you're trying to time a breakdown. If you know we're going to crash this week, yep, you can hold it. If not, forget about it. You can't even hold shares. Holding shares is like holding calls. They die over time. That's garbage. That's Wall Street garbage. You can hold it overnight, maybe 2-3 days, tops. What is this? Mining what? Gold? Yeah, if I'm gonna buy a gold miner, it's not this one. It'll be one of the two larger ones, Barrick Gold or Agnico. Agnico trades the best. I don't know what this is. So good luck with that. Sellers on the stock on the left, you can see that seller right here and seller right here, and buy the dip in order to tackle those sellers. SYM, symbolic, don't know what that is. All right, you have a bunch of support and a bunch of resistance. You're stuck in the middle. If you're looking for a trade, if you take a trade, you're guessing unless you have a reason on a shorter time frame. So if you have a study that tells you go long or go short, you're fine with either of those two. Losing 43 might get you 41, and there's a bunch of sellers at 48.50. Whoa, trip.com, why so choppy? So I don't understand this. Look at these quarterlies. Is this a seasonal thing? Maybe. That's a pretty fluctuating P&L. Not my favorite chart. So it rallies, it consolidates, and gives it back. It rallies, consolidates, and gives half back. How about a dip into 41 or 40? You have sellers and you have buyers. The buyers are winning overall, but I think they need to revisit that zone at some point. Target, oh my gosh. This here is not an obvious point of entry. That is an amazing recovery by the chart. I do like the company, but dang, nabbit, that is just way too much. But then again, it has had better days. So here's that 50% thing. You fall from point A to point B, and you're approaching 50%. So I'm going to guess that as they approach 190, give or take $5, they're going to have a huge fight on their hands. Look left. These are weeks. They had a great week that failed, great week that failed, great week that failed. So one can say 3 months, and look at that right there. So 185 market, plus or minus, the zone around 185 should be extremely difficult to break through, which means it's not an obvious point of entry, but short term you can definitely trade it to the upside. Look left and you see how many fails there are up here. That is not for me. TLRY, really? TLRY, wow. You remember TLRY? Remember TLRY when it went to, how much was it? Like $3, $3, $4, $5? No, $300. Yes, $300. This is the original GME. And yeah, 300 squeeze up there. Remember that? Yep. And it barely had like $2 in sales. So I don't know what we're doing here. Trading it or investing in it? Investing, I wouldn't touch this with a 10-foot pole. Trading it, this here is an exit point. Why? Because that's where they exited months ago. Okay, it could be higher, but I don't know if you can time it that well. So not investment, not a decent trader. That would not be a ticker I would have in my watch list. So you're either investing for the long term or you're trading. And tickers like that, TLRY, are not good trading unless you know your charts. And if you're asking me for help with the charts, you need to be in the daily, in the live room with us in order to trade that actively. That's why I'm answering it so short here, because nothing I tell you from week to week is going to help you, quote, trade the stock. And the investment comment is solid on my part. I don't think they're going to succeed. The whole industry, not just TLRY. I'm just reading the comments here about Palantir. Sorry, my window was stuck. Comment on Palantir. Yep, I lost on Palantir. What price would you be in at? Nowhere near this price. I would buy. Let me put it this way. The last time I bought it was 9 and 7, and people were hating on it back then. I'm confident it'll come down with it under 15, where I can sell a put under 15 to reload for me. But there might many entry points in between now and then. Can we do Iron Condor on Roku? No. Definitely not an iron condor candidate. When I tell you it's going to explode one way or another, not an iron condor. You make the direction call and you take a bet. Is everyone hearing? Yep. I'm looking through the comments here. Yeah. It will split. SOXS. Well, you sound very confident with big bold letters. What does that mean to you? That splits are good business? Okay, SOXL split. All right. Has it split before? Oh, okay. So the split I'm talking on the SQQQ is a reverse split. So not a regular split. Yeah, and you're holding calls because it's going to reverse split or shares. All right. So that's a game I don't play with a garbage sticker like that. Okay. You sound like you know what you're doing with it. All right, back to Transmedics. What is this? That reaction, it says it all. That's your playground, and that's really your playground. So you have a buyer at 70 and a seller above 82. Do with that information what you need. If I'm an investor, I have to evaluate the company. Wow, look at that P&L. So yeah, if you're an investor and you buy into 68, that's an entry of a half. And if it collapses down to the 40s, you add the other half and you go away. That's how you invest in it. Meanwhile, they told you they hate it above 85. So bizarre situation. Buy the dip, yes. TMUS, too violent of a stock to have such a consistent P&L. That's my initial reaction. Solid buyers below into 160. And solid sellers above 166. So ping pong between those two. And you have more sellers at 168. In other words, this guy needs to break out of 168 to be attractive technically. But between here and 168, there's $5, and it looks like an eternity. I just don't know what to do with it. I think it's a hold the shares if you want to, but if I'm looking for entry points, I would not. I would start 20% of my position, because if the market's correct, this one will be under 150. I know it feels impossible, but it has happened before. This red W is a bearish pattern, and 153 is target 1. 143 is target 2. So if they want, they have this scenario, and if you lose this guy, it'll come to target 1. That's target 1. How do you avoid that? You make a high and you go, actually the stop out is too high for this one, so you can short it with relative gumption if you know how to do it, like a credit call spread and debit put spread, but make sure you avoid earnings on the credit call spread. Tesla, all right, so they're selling rallies, right? And my comments have been be bearish Tesla. So the first line is 180 plus or minus a buck or two. They need to take that out. 192, 202, 208, that's a bigger zone. 212 to get you to 222. On a weekly basis, unless it gets to 222, it's at risk is going to the 140s. Now the immediate risk breached 160 almost. So solid support zone. The bounce was expected. Now what? Okay, we're zooming in. Now what? Last week's highs are resistance areas. If it approaches 180 through 182, 185, it's shortable via credit call spread. And it can retest the lows. If it loses the lows, like if for some reason it loses the 160, it gets to my 140 target a lot faster than I thought. So what do I do here? I don't hold calls. I don't add to my longs. I can stay long in my conviction buy for the long-term investment type of a deal. I don't add here. There are just too many questions. So trading, yes. Investing additions here, no. If I don't have a position I want to nibble, make it 20% of the total allotment I want to hold. TSM, this company is solid. P&L is like fake. It's so good. Other than the Taiwan headlines, good business. Why isn't it at the top of the heap? Okay, that's another. Like, this is a better business than Micron by a mile. Look at the P&L. Micron's P&L is crap. This P&L is bankable. Look at the net. Look at the sales growth. At least it's consistent to a degree. And then you look at Micron, and it's just, there's no net nearly as big as this one. And it's just, anyway, TSM, solid business to buy on dips. I don't know if this is a dip enough for me to buy. Short term, you can go long against 130. So if I can sell a put or put spread at 130, okay. But if they hate it now, when they love everything else, when everything else falls out of, when they fall out of love with everything else, this one will have a punch to take. So how about I say this? If it loses 132, you can take it for 122. So don't load up. TTD, we missed buying the dip. We bought it if you were in the live room, but I didn't even have time to type it up and send it out. Up here, it's definitely not a starting point from an investment perspective. Trading-wise, there's a buyer at 84.50 and a seller last week. They showed us their hand, 80 and 90. Let's call it 90. So as it approaches 90, if you want to short it with a credit call spread or a debit put spread, I get it. Solid support through 76. TWLO, good company, grows a lot, spends a lot, moves fast in both directions. I don't know if I have a clear entry point here. If you twist my arm, I'd be long, like I shared, a credit put spread that played out. It's a winner. You can close it. If they take out 63, they go $3 to $4 from there, higher. So if you went long with a credit put spread and now you're putting some money into a debit call spread and you have an outlook that's positive on the market, that's your trade. Otherwise, buy dips, more like what we did. They have solid buyers from here through 56. Uber, I think it was stretched. It was a short, and if somebody shorted it based on my comments in the live room, they made money. Credit call spreads, that's how I would short it. In fact, no, wait, we bought puts. I don't remember the outcome of the puts. But I don't own puts right now, but I would have bought puts up here. So how about this? Next time it rallies into 82, I'll try to short it again. Meanwhile, it has buyers spread through 73. You lose 73, you're going into the 60s. So solid buyers, solid sellers for now, stuck in a range. Not a candidate for an iron condor, not in my book. This one is in the hands of the buyers again. So yes, it could drift up to 250 or 251. And you do have support. Now, the rub, if you lose 240 for whatever reason, just a $6 dip, I think you lose 232 and you go to 230 or 228. So, yeah, you have plenty of support. And the target is up here. But if you lose this support, the downside is down in here. You do have support in the middle. So S here, target here eventually. S here. S is for support and R here for resistance. So actually you have resistance a little bit lower too. This whole zone is resistance from back here and this area. Okay, UNP. UPS, whoa. I vowed not to trade these suckers, that and FedEx, because they are, they have so many headlines. Like, the business should be solid as hell, yet the headlines are incredible. Every day they've got something going on with the union this and union that. So here's the thing. You better not lose 138 or 140. You might end up at 125. And you have a lot of catalysts above you. It's a lot of sellers above 160. But if you can take those out, you go at 177. I don't think it'll do either, but I'm not going to put my money where my mouth is. So an iron condor could work, or a credit put spread on this dip would work. Debit call spread may work. A combination between credit put spread and debit call spread on the dip would have been a good thing to do. I wouldn't touch it here. Now, if they dip again, you could repeat everything I just said with a credit put spread. But you better not lose, first of all, the earnings dip and the consequent this one here. Or the other earnings dip, or the other earnings dip. So let's see if they can build a nice rally off of this this dip here and tackle that. So if you bought the dip, you want to add double call spread, that's the right thing to do. Solid support, yeah. So Upstart, I wouldn't touch it. Upstart should go to 25, if not 24. We'll see what happens. The P&L is okay. The business is crap. The way they treat people should be illegal. I've done the math on some of the loans that they have. You can pay for 2 years and not make a dent in what you owe. And I mean it. Like, it will be your 50% of what you pay is going towards your debt for 2 years. Like, what? No, make that. The rate, if you calculate it, you're paying 50% interest for a long time. I know that's an incorrect mathematical statement, but that's what it works out to be. It's just outrageous. So at some point, people are going to default and their business is going to get a bad rep. 28, 29, take that out. Catalyst, 31, 32 target. Buy the dip in order to do that. So as much as I said bad things about it, it is a bad dip. Buy the dip into 26 and 25. So I get it, the people that are long. If you're an investor, just take the other stuff I said about it into consideration. Okay, so this is a very wild stock, and it has had support. So it's a better long than a short on dips from here. Wow, loud car. United Rentals doing very well, surprisingly. Very easy to break out of 730 technically, and if you do, you go to 760. Hard to short. You buy the dip because that's what the market is doing with it. That's the trading comment. If you're an investor, I don't know what's the rush. Wait for a crash. Almost like crypto. It's pretty high. It might get higher, but it's pretty high. Verizon. Next time, Jeff, don't hope. You know, it takes 5 minutes to tell me which tickers you want to see on Friday or Saturday or Sunday morning. Okay, we have sellers at 42.5. So this is an end point until they take it out, and then it becomes a catalyst. So if you twist my arm, I would go bearish on it via credit call spread and or a debit put spread for about 3 weeks. Now, if they take this out, they go to here, but that's never my intention. This here is a bearish chart. Target is 38 if they don't take out 44. I'm going to say it that way. If they don't take out 44 on a closing basis, the target is 38. I don't know what'll take them there, but that should say, okay, I won't hold calls. That's all I'm saying. I could throw a credit call spread. I could buy a debit put spread. I wouldn't do a credit put spread. I would not add to my shares either. Zoom, stuck in a range, but not really. Look how violent it is. Super hate, super love. Somewhere in the middle lies the truth. So finally we're into an area where it makes sense. A lot of support below. You can sell a credit put spread, and you can sell a credit call spread. And it should play out. But the stock is very volatile for some reason. The business isn't. The stock is. So it's a good long via credit put spread if you can throw them below 63. Earnings in 51 days. Zoetis, it's been on my list to trade. I don't know a lot about it, so I haven't pulled the trigger. The P&L looks okay, solid. You can see the net income is solid and it's stable. And so I'm thinking, why aren't they buying it like it's hotcakes? So somewhere down here, there's a buyer. So if I sold a put to own shares, that's probably the best thing I can do. These are the comments. They tested hard wicks from here, and they bounced above a solid support zone. Let's put it this way. If this stock is down here, people should be putting it in their investment portfolios. Because look at that P&L. That looks beautiful. I honestly don't know what they do. Medicine. Okay, so goes Zoetis. The dividend is amazing on Verizon, yes, but how amazing is it? Yeah, I said to buy Verizon when it fell. Somebody's arguing for Verizon. Yeah, I agree with you. That's why I say buy it down here, not up there. So when it fell because of pipes, lead pipes or whatever, the headline, I said buy some. When it fell into 34 or 3 or something like that, I said get long. Even at 38 was a good long here, made money. Every big dip is a reason to accumulate. But up here, if it's falling from here to here, that eats all the dividend. It is my choice of dividend company, except the stock is not acting as much, as stable as it should be. All right, so that is the last ticker, folks. We are done. DONE, done. Folks at home, thanks for watching. Come and join us. We had 55 people today. That was pretty cool.